a DIYer. I'm going to manage everything. I'm going to find my tenants. I collect rent. I do everything. And it's really hard to do that from a distance if you're, doing value add multifamily or value add office buildings or stuff like that. So with a single tenant industrial stuff, these are net leases. These are tenants that are there for the long term. They're long-term leases. There's often annual escalations, and the tenants generally take care of everything. They pay taxes, insurance. They do all maintenance on the properties, and so I hardly ever hear from my tenants, and except when I get the ACH notification that they're paying me every month, and so.
Welcome to the Real Estate Reserve Podcast. I'm Jason Ballin from Hard Money Bankers. Ian Horowitz from Equity Warehouse coming to you live. Ian looks like he's a little bit under the weather, but we'll be good. We'll be good. If this is your first time tuning in, thanks for joining us. Promise we will keep this informational, and we also like to have a lot of fun. We have a great guest lined up that we will introduce in a second. If you're a return viewer, follower, listener, watcher, thanks again for all the support. We certainly couldn't do it without you. Ian, definitely looking forward to interviewing Jonathan here and some of the stuff that he's doing in a few states that we're not all that familiar with. Right?
Yeah, way out west. I like that. I think this might be our first investor has done some investments in these states. So I'm interested to learn more about that. Guys, if you get any value out of this, it's not about us. We don't care about the subscribes and the likes. What we do care about is making sure we share the show. You get value out of this. The best compliment we can give our guest is by sharing it. And with that being said, Jason is spot on. My allergies are absolutely killing me. Got back from Charleston from our mastermind, and I don't know if it's the dead leaves, the brown leaves finally hitting the ground. It's crushing me these past few days. But either way, enough about us. Let's bring in Jonathan Hayek. What's up, brother?
Hey, great to be here. Thanks for having me, Jason and Ian.
Yeah, absolutely. Why don't we just start off just a little bit of background, Jonathan, of how you got started in real estate, when you got started in real estate, and what you're currently concentrating on.
Sure. I started my working career as a special education teacher. Nothing to do with real estate, no experience in real estate. But as I continued on in my teaching career, I eventually got married, and my wife and I realized that a lifelong career in teaching would not get us to where we wanted to go, both in terms of financial freedom and geographical freedom, time freedom. And so we realized that there had to be another way. And so we started listening to Bigger Pockets, started drinking the Bigger Pockets Kool-Aid. And in 2017, flipped our first house, did a live-in flip, started to buy small multifamily while I was still teaching. And so while I was teaching on nights, weekends, summer breaks, school holidays, I would be flipping houses, and I would use the capital that I made from the house flips to buy small multifamily. And the original plan was to build an empire of small multifamily properties. And eventually I realized that the management requirements of an empire of small multifamily would also not bring me at least the time freedom that I desired. And so eventually I transitioned into commercial properties. And so I still do own some small multifamily and kind of medium-sized multifamily, but really focused on commercial properties, specifically single tenant, small industrial properties at this point.
Funny how everybody's initial game plan changes after you start operating and digging into the business model. And it's like, cool, I thought this was the direction that I was going to go in, but then I realized, well, maybe I need to change some stuff up. I mean, that's, it's something that you can't learn or teach, up front. You just kind of have to figure out yourself of what works best for you.
Yeah, absolutely. And, I learned real estate by reading books and listening to podcasts. And a lot of podcasts are, they provide great info, and podcasts have changed my life. But sometimes they can be kind of overly simplified or can glamorize real estate. And, oh, it's just so simple. You just do this, then you just do this. But then you actually start doing it and you realize, oh, this is a lot harder than I initially thought. And so, look, I mean, we all have to learn those lessons, and you have to do deals and learn your lessons. And then you know those lessons for the deals later on. And that's how you learn.
Yeah, no, I would agree with that exact statement. I remember early on being like, "Oh, I'm going to own 100 single family houses, or I want to buy this whole neighborhood." I thought it was the coolest thing in the world. And I was like, "Holy shit! Like, what infrastructure you would need to do that versus buying a big commercial deal?" And I think a lot of people put commercial deals up on a pedestal. I did it for a long time until we did our first one. I'm like, "Holy crap!" Like, it is just one big single family deal, and there's so much more work that goes into it, but you get to do it all in one shot. Like, what was your experience going from single family real estate to commercial? Were you nervous of it, or was it like an easy, natural walk into it?
So my first foray into the commercial world was I bought a vacant office building. And so I was having all these headaches with my small multifamily properties. And I'm like, man, there has to be another way. I wonder what commercial properties are like. I wonder what it's like to own one of those. And so, I learned residential real estate by doing deals. I would read some books, listen to podcasts, and then do some deals and learn some lessons. And so I thought I would do the same thing with commercial. And so in my town at the time, I was living in Cheyenne, Wyoming. There was this vacant office building, not large, about it was like 5,000 square feet. It had been sitting on the market, really, really busy area of town, about 20,000 cars per day pass by, but it's just sitting there, and it sat there for like 9 months. And so I toured it with this broker that I'd done a bunch of deals with, and he has more experience in commercial. And so I thought that I could buy this commercial property, and it would be like kind of like an easy transition from multifamily. That, okay, if I were to buy a vacant multifamily property, I would just lease it up and find some tenants and start collecting income. And so I thought the same lessons would apply to commercial, to this office building. And so I did it. I had some 1031 money. I bought this vacant office building, and I started to try to lease it up. And I did some before leasing it. I did some cosmetic upgrades, upgraded, taking my multifamily lesson. So upgraded bathrooms. I thought, well, even commercial tenants are going to want nice bathrooms. And so I upgraded bathrooms. I did in a couple of the offices, I did like a shiplap, like barnwood accent wall, stuff like that. I got furniture and made a nice waiting area for tenants to use. And so I thought, if I were leasing an office in this space, this is the kind of stuff that I would want. And so that's what I did. And it eventually did work. But I guess the biggest lesson was that commercial stuff takes longer than residential does. And that was my biggest lesson, plus a million other lessons with that first commercial property of that office building.
Dude, Jason and I literally were we talking about that this morning?
Yep.
Exits on commercial buildings?
That take longer. Yeah, but
Yeah.
and nobody. It's hard for people to understand that. It's hard. We were talking on the lending side and being a little bit more conservative on that. And I know in general, typically you can get more aggressive banks to lend, higher based on, rents in place and stuff like that on commercial stuff. But as a private lender, or lending your own money, or even as an owner, yeah, I mean, stuff just takes longer. And I think people investors kind of forget about that. There's no real listen, any residential property in any neighborhood, for the most part, you could have a 30-day, sales price, maybe even a 7-day sales price. Commercial, not so much. It's a much harder thing to, potentially pin down. But yeah, that's all aspects of commercial, like everything across the way. I mean, Ian's been negotiating for a year on some leases on some of the office stuff that he has, and who knows where that'll play out. Due diligence is like, okay, cool. Well, we're in a study period for 90 days, 120 days, a year. Okay, then we'll determine if we want to buy it or not. Like it's different. So was your plan always to be like trading up assets? Like after you decided like, hey, this isn't really going to work the way and scale the way I want. Was it like, let me just try to get into higher price asset classes, or did your 1031 funds kind of force you to do it that way?
So with the office building, it wasn't even that expensive. I think I paid 500,000 for it. And I got into it because I was curious and I wanted the experience of doing this deal. And I thought, how bad can it be? And so it turned out okay for me. I made some money. Like I said, it took longer. The dispo, I actually had a contract on it in a day when I went to sell, but the escrow took 3 or 4 months, and I made some money on it. But I guess my motivation for getting into commercial was a little bit about the price point, but more about the management. And so since then, that's been my only office deal. I'm not real eager to do another office deal at this point. What I really like is single tenant industrial, and I own a couple of those right now. And so my real motivation for getting into that asset class is, one, yes, that higher price point, the margins can be more, but it's also about management and lower management. And so I don't know if you want to go into it now, but I really like this asset class for the management aspect. I've relocated for lifestyle reasons to a mountain resort town in Colorado. And so it's really hard for me to do deals where I'm living right now. And so almost all the deals that I'm doing are out of my market. And so I'm historically like a DIYer. I'm going to manage everything. I'm going to find my tenants. I collect rent. I do everything. And it's really hard to do that from a distance if you're, doing value add multifamily or value add office buildings or stuff like that. So with a single tenant industrial stuff, these are net leases. These are tenants that are there for the long term. They're long-term leases. There's often annual escalations, and the tenants generally take care of everything. They pay taxes, insurance. They do all maintenance on the properties, and so I hardly ever hear from my tenants, and except when I get the ACH notification that they're paying me every month. And so that's really the big motivation for my transition to commercial.
Yeah, no, that makes a ton of sense, and I think there's a lot more scalability. It makes a lot more sense. I think before we talk, you mentioned single tenant. I got some questions around that, but I think a more important question, dude, we're East Coasters, right? We are used to seeing people and like driving forever and still seeing people. For whatever reason, I'm looking up Cheyenne, Wyoming. It's 65,000 people, but I got to imagine like you're out of the city, you're gone. Like you're in the woods. Like talk to us about operating in what I would call, I guess, a secondary market of like Cheyenne, Wyoming. Like, has there been any challenges now that you're investing outside of there? Like, how is that city? Like when you're looking at your investments, how do you value the city and what it does for you and being able to find good assets to buy?
I'm still doing deals in Cheyenne, but I no longer live there. And so you're right. Cheyenne is just a town. There are no suburbs. And so you leave Cheyenne and it's the plains. There's nothing there. Cheyenne, like you said, is about 65,000 people. It is the largest town or city in Wyoming. So at 65,000 people, there are, in the entire state of Wyoming, there's less than 1 million people. It's the least populous state in the country. And so, yeah, I mean, it is definitely a different kind of animal doing deals there, but it's what I know. And so I live about 3 hours away from Cheyenne now, kind of in the mountains in Colorado, but still doing deals and looking for deals in Cheyenne. And so one really good thing about doing deals in that market is it. Like I know the investors, I know the brokers, I know the cross streets. I know, like, someone tells me that a certain property or a certain building is available for sale. I know what they're talking about. I don't have to do tons of research because I know who the former tenant was. I know what it looks like. I know what the parking situation is and all that kind of stuff. And so there is, I think, a real competitive advantage in that aspect to knowing your market and just knowing this really small area. This is where I do deals. I have bought deals outside of Cheyenne, but the majority of my deals probably, out of 50 deals I've done, probably 44 of them have been in Cheyenne. And so, you know the players and you know the market, but at the same time, on the flip side, there's a cap to what you can do. With only 65,000 people, there aren't that many houses or commercial properties that are going to come on the market. It's just a numbers game, right? Whereas if you live in an MSA with 8 million people, the numbers are different, and there's always going to be stuff coming on the market. And so one reason that I branched out of Cheyenne and started looking elsewhere, I currently own an industrial property in Oklahoma City, was just the ability to find deals, because in a small town there's going to be fewer deals, but at the same time, big advantages to just having an intimate knowledge of the market.
Yeah, I like that, and that's something that I've been dealing with, from operating out of state and now starting to pull our money back and operating within a 4-hour radius of us, really knowing the submarkets, knowing the path of progress, knowing exactly what's going on. I think there's a huge competitive advantage. And like when we first went from single family to commercial, it was like our best knowledge is being able to execute on construction, but really our best knowledge was knowing the ins and outs of the city, from being firemen, from knowing everything that was going on in the submarket of Baltimore, from where we grew up outside of Philadelphia. I would agree with that statement 100%. What do you look for? What do you look for when you're investing outside? Like when you bought that Oklahoma City deal, like I don't know if you had any connection to there, but like what attracted you and got you comfortable with buying out of state and buying that deal? And just real quick, if you could like kind of give context to like what size your buildings are, just so people can kind of frame that up too.
Yep. So currently own 2 single tenant industrial properties. They're both like right around 10,000 square feet. Purchase price was right around $1 million or just over $1 million. And so what I look for in a market is, a immediate area of at least 100,000 people, growing population, preferably an airport reasonably close that I can get to my property if I need to, diverse employment base, things like that, growing population, if I didn't say that already. And so what got me comfortable in buying this deal out of state, I don't have any connections to Oklahoma City, but I did a bunch of research on MSAs. And so one other requirement is being in a tax-friendly state, and Oklahoma is that. And so I created this big spreadsheet. I did a ton of research on MSAs, and I narrowed my search down to like 10 or so MSAs. And so Oklahoma City was one of them. And so I started talking with brokers. I started looking at properties on Crexy and LoopNet and calling brokers and asking them about their listing, and asking them if they're looking for more clients, and just getting a feel for brokers to see how much knowledge they have on the market, because I'm going to be relying on those brokers for things like knowledge about lease rates, the path of progress, the vacancy rate for that asset class, and just the general desirability and demand for that type of asset. What are tenants looking for in this MSA that this building does not have? So if that's like dock doors or bay doors or a certain like size yard, things like that, a broker with experience in this asset class would look at that and say, oh, it's going to be harder to lease because it's got a super small yard, or there's no turnaround for semis, or stuff like that. That's intimate knowledge that a good broker is going to have. And so I got comfortable talking with some brokers, and I saw a deal pop up. And so I contacted a broker that I'd been talking with, and I said, hey, do you want to submit an offer for me on this property? And I'm comfortable investing out of state with these types of properties because of the really low management requirements. If this were like a 25 unit value add multifamily that was going to require contractor oversight and evicting tenants and things like that, that would be an absolute nightmare to do from 12 hours away. And so those are not the types of properties I'm taking on. But with this property in Oklahoma City, it was an expiring lease. So that's something that I look for in properties that I make offers on. Expiring lease, below market rent, and a general desirability of the property and the area. And so this property fit all of those things. The seller was just retiring. He was in his 80s. He didn't care about the that he could get more value for the property if he extended the lease. He was just ready. And so it was occupied with a tenant. That's something I look for. I don't buy vacant properties. I want occupied properties with tenants, and I want the tenants to want to stay. So it's a quality tenant. It was a regional landscaping company, and they had, when I bought it, they had like 6 months left on their lease. And so in the commercial world, these commercial properties are valued based on a couple things, but mainly how much income is the property bringing in and what's the quality of the lease and the tenant. So the quality of tenant in this property was great. The quality of lease, not so great, because it was below market and there's only 6 months remaining on it. And so a lot of investors are looking for, in this type of asset, a lot of investors are looking for long-term stability. And 6 months is not long-term, because an investor would look at that and say, well, in 6 months, this tenant might leave, and then I have a vacant property that I have to lease, and there's no income coming in. These properties are also really difficult to get financing on. So there's all kinds of roadblocks to selling a property with an expiring lease. That's part of the reason I like it, because there's opportunity there. So I was able to close on the property. I paid cash, didn't get any bank financing. And I had talked with the tenant before I closed. The tenant made it very clear that they wanted to stay. They wanted to sign a long-term lease. So closed on the property, signed them to a 5-year lease extension at higher lease rates, and still own it, and is going really well.
So that's a good situation. That makes a lot of sense. Why not multi-tenant stuff? I'm not talking about lots of value add, in the residential space, but like, would you do a deal like that with 4 tenants?
I'm open to it, is the answer. Recall a couple minutes ago when I said my main motivation for getting to this asset class was the low management requirements. When you get into multi-tenant, and I hear this all the time, there's nothing wrong with multi-tenant properties. I hear a lot of pushback on, my affinity for single tenant. That is completely understandable. The advantage of multi-tenant is just you spread the risk out. The tenant leaves, one tenant leaves, you still have 3 other tenants there to pay the bills. Totally get that. The advantage of single tenant over multi-tenant is the management aspect. So in a multi-tenant property, even if everyone's on triple net leases, those are pass-through expenses. So they're paying taxes and insurance, but really I'm paying taxes and insurance, and they are paying me back for it. Yep. When the snow needs to be removed, when a sprinkler needs to be replaced, I'm ultimately responsible for it. Property manager, if I went that route, is responsible for it. Whereas in a single tenant property, those expenses and those responsibilities are not passed through. My tenants literally pay property taxes directly. I don't get the tax bill. They pay insurance directly. Their business name is on the insurance. I'm also on the insurance, just a little farther down. And so they are directly responsible for it. When the snow needs to be plowed, the tenant is responsible for it. And so, if I'm living 3 states away from my property, I do not want to be getting a call on Tuesday morning saying, hey, the snowplow driver didn't show up today. I don't want those calls. And so there's nothing wrong with multi-tenant properties, but that's the reason that I like single tenant.
That makes sense. I don't want those calls either. That's why I do lending instead of buying. But I agree. That makes a lot of sense. Do you think in general those types of properties, because those are attractive, types of properties, especially if there's already a tenant in place, even if the lease obviously is expiring, are those in general, you think, hard to find? You think there's a lot of them available if someone was open-minded enough to go into multiple states and research states, or do you think they're harder to find than some other stuff?
The great deals that I'm looking for are really hard to find, because most of these property owners are investors. They understand that selling a property with 6 months left on the lease is not to their advantage. They're selling at the bottom when they do that. And so it takes a special kind of seller to do that. It takes a seller that is retiring and has maybe passed away, or has just had it with this property, and they don't want to deal with it. Like whether they get an extra 20 or 30% for the property if they extend the lease, they don't care. They just want the property sold, and now is the time to sell it. So I have another industrial property in Cheyenne, same situation. They had less than a year left on the lease, and the seller was retiring, and he's like, I don't know what the tenants' plans are. They might stay, they might leave. I don't care. I just want to sell this property. And so there are, if you go on Crexy, there are tons of single tenant properties available. There's no shortage of single tenant properties. The problem is a lot of them are vacant. A lot of them are overpriced. A lot of them are in terrible condition, are going to require tons of capital expenses. And so finding quality property with a great tenant that wants to stay, those are tough deals to find. I've been able to find a couple, but they are pretty elusive.
Okay.
Yeah, no, that makes sense. And I know there's some big REITs that's all they chase. They like that single tenant stuff. I guess probably exactly what you're talking about. I've always lived in the multi-tenant space. I just like the idea of whether it's a house and owning multiple houses, or multifamily and owning multifamily with multiple units, or even just commercial space. And we only have one single bay tenant space, but mostly everything's been divided just to offset it. So I love the outlook and the different point of view. I mean, you've gained a lot of knowledge. I know you share a lot of knowledge. You got your podcast, The Source of Commercial Real Estate. Like, what do you talk about over there? And like, how is what you've learned been able to push, like, help other people or find you deals? Like, what is doing your podcast brought to your real estate business?
The reason I started the podcast was exactly 2 years ago now, was to learn. And, it was selfish reasons, but I wasn't and am not raising money. I'm really not trying to build a thought leadership platform. I was trying to learn how to do commercial real estate, and I found that there are so few places that actually teach the non-residential commercial real estate. There's lots of multifamily podcasts, and that's great. And there are some podcasts that occasionally hit on commercial stuff, but I wasn't really able to find a resource that would get into nitty-gritty details of how to do commercial real estate. How do you find commercial tenants? How do you figure out what lease rates are? How do you organize a lease, and how do you frame a lease to be a win-win? How do you add value to an industrial or retail property? How do you reduce risk so that you can have big upside but limited downside? I just couldn't find any resources. And so I thought, well, I'm going to start a podcast. And so I started the Source of Commercial Real Estate about 2 years ago. And I talked to experts in the generally non-residential commercial real estate. So industrial, retail, office are the big ones I focus on. I talk to investors, I talk to brokers, I talk to attorneys and appraisers and all kinds of people like that and I ask the questions that I want to know because I am genuinely interested in learning this asset class. And so I put it out there as a podcast because I thought other people in my situation might be interested as well. And so it's been great. I've been able to extend my network, and people have brought me deals. I haven't closed any deals through the podcast, but I do get phone calls and LinkedIn messages with people bringing me deals, which is really cool. And I'm sure that it's going to work out at some point. But I've been able to build relationships and build my network and just continue to learn about these different asset classes.
Yeah, no, that's awesome. It's the same reason, some of the same reasons we do it. It brings great credibility, expand your network. Yeah, real estate's small, very, very small, especially when you get into investing across the country. You run into a lot of the same people. I was honored to be a guest on your show. I thoroughly enjoyed it. And, I agree. There's not a lot of good commercial real estate podcasts out there that talk about the true ins and outs. Ours is a little more diverse because, we're opportunistic investors, and it's what we're in tune with, and we enjoy it. So definitely fun to watch. I mean, it's cool to see what you're growing and building. It's absolutely awesome. I'm gonna have to get out to Cheyenne, Wyoming, and go check that out. We've been joking around talking about hosting our mastermind up in South Dakota, and trying to get out that way and go check all that fun stuff out there. So sounds definitely cool. One question we like to ask all of our guests before we let them go: what's one book or podcast that you think everybody should know about?
I guess the book that got me super interested in commercial stuff was Brian Murray's Crushing It in Apartments and Commercial Real Estate. It's just if you haven't read it, you need to. Brian Murray is just an awesome human, and it's a fantastic book that he talks about multifamily. He also talks about non-residential stuff, and he does go into some of the nitty-gritty details about commercial stuff. He's got some great case studies in there. You sort of follow the path of a couple of his properties throughout the book, and so yeah, I'd say Brian Murray's Crushing It in Apartments and Commercial Real Estate.
Well, that's a new one. We will definitely get that one into the show notes. We'll have to go probably check that out too. It's always good, even as an experienced investor, to go read and learn and hearing a tip or trick or something from someone. So I'll add that to my list to read. I'm currently reading, was it The Confessions of an Economic Hitman? I've taken the darker side. It's very interesting. And a lot of this stuff that we deal with in politics is, now I understand why, but that's much more positive. I'll have to go check that one out. Where's the best place people can find you on the internet? They want to learn more about your podcast. They want to learn more about what you're doing, or they want to follow you around and see what you're doing.
Go to my personal website. It's jonathanhayek.co. And so you can, all my links and bios and properties and ways to get in touch with me can be found there, jonathanhayek.co. Yep,
we'll get that in the show notes as well. Jonathan, we appreciate you coming on here, sharing your experience in the single tenant commercial space. And guys, if you got any value out of this, please share it. It's the best compliment we can give John. And we'll catch you guys on the next one.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.